So guys, I guess there'll be two different versions of this, or two different parts to this. This is part two. I didn't mean to stop the recording, but I inadvertently hit the stop button. So anyway, we're talking about Unity software. Big shout out to Julia, our newest student. And I want to bring up the implied volatility chart. Let me show you this. So the implied volatility chart, we go to ivolatility.com. There's U, I put in U, I come down here. I base it based on what I'm taking a look at. I'm looking at either the August or the Octobers. Haven't really decided yet. But even if you take a look at this and we look at the implied volatility as it stands right now, it's 48.33. We look at where the low is. The low is right here at 45.05. The high is 121. So it is a little bit less than 4%. It's in the fourth percentile. I mean, you can't get much lower than that. I always like to get things that are in the 30th percentile or lower. The lower, the better. And you can see implied volatility has been on a decline. Great for buyers. And now it's starting to move back. It's settling down. It's starting to move back up. So we have this in our favor as well. So I do like that. I want to stop share here and make sure I don't hit the wrong button this time again, like I did before. And I want to go back to the chart. So let's take a look at this. Implied volatility is in our favor. I like that. So I like the fact also that when we take a look at this chart, it has fallen. But before I zoom in here, when did it start falling? It started falling back here at this time frame. So that was February of 2021. And now we see it baselining. We start to see it move back up. I wish I would have known about this earlier because I would have taken a piece at that time. But I like the fact that now we've crossed back over the 200-day moving average. We're on an uptrend. Today, the market was down over 250 points, and Unity software was still holding strong. And it was positive, as you can see. It was up 2.85 today is what the stock was up. So I like it. In a down market, it's showing relative strength. So here we're crossing the 200-day moving average. So I like what the action is showing right now. I think this thing continues going higher. How much higher? Well, let's take a look at this. Again, going back 6 months, we're looking at 175 is where it was back in December of 2020. Do I think it can get that high? Who knows? Maybe over time it can. But what I'm taking a look at is near term. So I come back over here. And if you take a look at this area right here, right there, you see what they call, this is a big move up, and then you call a pennant or a flag, a bullish formation. But there's the breakout right about this top of this area, and then it starts to run. So I pick up on those little things. Most people don't see them, but I've been trading for so long, these things just pop out at me. So let me zoom back out of it. So if I come back over to this area, I take a look at that area where it started making a move up in this area. I look for commonality. I look for areas where I see there was an area of resistance, an area of support. So if we take a look at this area right about here, it's between 214 and 216. So let's just call it the 215 area, right about this area. If you take a look at this line, and I were to draw a line across this area and hold it right where the top of that line is right there, look what that area is. This is about 116. Let's just say for simple math, we call it 115. This is going to be my target price. It's going to be somewhere between 110 and 115. Let's just say 115. Now, if I come back over and I look at the options, and I haven't decided if I'm going to do the Octobers or the August, but let's look at this real quick. I know already I am going in the money. That's my typical thing that I'd like to do. I like to suck out as much of that extrinsic value as possible. So here we have the August 80s that are going for 2360 by 24. Not bad. Then we take a look at so that's the August. We take a look at the Octobers. Take a look at the Octobers, and it's going for 24.4 by 25.4. Not much of a difference for an extra, 2 months of time. I'm typically in my trades for a lot less than most people think. I'm in my trades for anywhere between 3 to 5 days, sometimes a couple of weeks. But even this, guys, even if the trade starts to make a move, and you've all seen me do this with Copen and other trades, I don't sit there and go through the ups and the downs and the ups and the downs. I'm typically either selling something against it to reduce my cost basis, or I'm going ahead as it pops up and I take a look at the ATR, the average trade range. I take a step to the sideline and sell out. I did that this morning with Square. If you take a look at Square, SQ, I sold at a square almost at the top there. Do I think that square, I don't, is it that because I don't think that square has any more room to run? Heavens no. I think square has plenty of room to run. But I like to be able to go ahead and get these big flushes to the upside. I take a step to this to the sidelines. I'll let this thing kind of consolidate. And if I miss the trade, so be it. But I'll let it consolidate. And my thought is that most trades that pop over the 200-day moving average do have a tendency to pull back down. If it pulls back down to about 223, 224 area, 224, 225 area, I'm going to go ahead and get back into it. If it doesn't, I'm not worried about it. Now, how the heck did I get started on Square? I get carried away with these things. Let's go back to Unity. But I'm just telling you, I think that Unity could probably get up to 175. It's not going to happen tomorrow. It's not going to happen overnight. But my thing is, I like to pick out good looking trades and ride them. I get in, get out, get in, get out. That's how I trade. You do what you need to do. But when I take a look at this, we moved over the 200-day moving average. If we choose right now we're trading at 102. My target price is 115. If I were to go ahead and make that trade, if you take a look at if you take a look at the spread there, and you understand that if your target price is 115 and you're choosing the $80 strike price, doesn't matter what month you're choosing, right? But if you're choosing the $80 strike price, that's a $35 spread. That's keep that in mind. That's a $35 spread is what you're talking about. Now, let's go back and take a look at the option prices here. So if we take a look in the money, let's just say August, for instance, you're paying 24 bucks. That's the ask price. You can probably get it for cheaper, but let's just say 24 even is what you're paying. And this makes a move on or before August timeframe. Intrinsically, not extrinsic value, but intrinsically, that $80 strike price is going to be worth what? It's going to be worth $35, right? How do I know that? Well, because you do the math on it. You have the $80, the right to buy the option, the right to buy the stock at 80 bucks a share. If the stock is sitting at 115, that's a $35 delta. That option is worth 35 bucks. You bought it for 24. That's over a 41% return on your money. And the quicker it does it, the more you're going to collect on the extrinsic value. The more you're going to collect on the extrinsic value. So I don't mind, going out to August or even going out going out into October. I'm not going to stay in the trade that long. I may be out in a week. I may be out in 2 weeks. I may be out in 3 days. Who knows? But if the stock makes a move over all of a sudden to 115, I will tell you what, that's a resistance area. I'm taking my money off the table or taking a big portion off the table, and I'll look to get back in. But that'll be about a 41% return on a trade that looks pretty solid. You guys do your own due diligence. Again, I want to give a big shout out to the entire group. Ben, for laying down some golden nuggets as well. Airbnb and some of the other ones, and Mike being able to participate. I mean, everybody. That Megan being able to turn me on to other stocks and remind me of the stocks that I've had on my watch list. I need to go back and take a look at. And then our newest student, Julia, being able to come up to the table first day in the group and be able to lay this down on us. And again, this is a trade that I'll be looking at getting into tomorrow. Hope you guys enjoyed this. Hope you enjoyed the explanation and get a little bit more insight into how I take a look, a professional trader takes a look at analyzing the market, and particularly when it comes down to options, what strike price, what option I'm going to do, and some of the reasoning behind that. All right, guys, have a good one, and I will talk to you soon. This is Bruce Dinger. Take care.